Hey, good afternoon, everybody.
Good afternoon, Professor.
How are you, Daxton?
Good afternoon, Professor. How are you?
Good, good. How are you, Eva? I
I'm doing
see
well.
five people currently in the collaborate session and in the today's forum. Let me check. Well, actually, we have more people. I guess we have more people in the collaborate than in the discussion board. But let me just remind you that it's the discussion board that counts for your attendance. Okay, that's the first thing you have to do when you join the Blackboard. Okay, when you join the class, you must first go to the discussion board and report your attendance, because that's otherwise your attendance is not validated because there's no physical proof. Okay, um, so if your name is here and this record won't be retained. I mean, this is transitory, right? um, so you, if your name is here but not here, right, please. Yeah, okay, now I see more people here. I see six people. All right, good. So all right, so our in our last class, so we were almost there. I just couldn't, we just ran out of time, and so we couldn't, conclude the income statement. But now we all know that um, the uh, income and expenses are all identified, right? They're all detailed out. We know primary source of income is sales revenue, and the secondary source is passive income. Investment income is a very a characteristic or typical case of passive income. And then for expenses, right, or CGS or direct cost or total variable cost. And there's indirect cost, which is also called OPEX, operating expenses, and which is roughly equivalent to total fixed cost. And I told you total fixed cost, total variable cost, they are all microeconomics terminology. CGS and cost of goods sold, um, and OPEX, they are all accountings terminology. But uh, the reason total fixed cost is not exactly the same thing as operating expenses is because the focus is different. I mean, total fixed cost is more focused on the is focusing more on the sunk cost or the initial investment or the startup capital, right? And I explained, what the sunk cost is in the last class. Initial investment or startup capital, sunk cost, they all mean the same thing. Whereas, OPEX, operating expenses, are more focused on month to month, quarter to quarter, right? Uh, uh, Fixed cost. Uh, but eventually, they will operating expenses can also reflect the initial investment because, for example, we have assumed this computer manufacturing company, and obviously it's manufacturing, and the most characteristic um, aspect of manufacturing um, is the what the plant and equipment, right? Plant and equipment. There can be no manufacturing without plant and equipment, and the plant and equipment requires initial investment. because you must have plant and equipment in place before even before starting the production. And this it would take construction, and it's not just so normally it would take 1 or 2 years or even more to have a full fully fledged production facility, right? It cannot be just set up overnight, or it cannot be set up in 1 month. It will take up to like 2 years most of the times, and then and plant and equipment will take tens of millions of dollars or hundreds of millions of dollars, right? So to recover this initial investment, right, you will have to operate. You will have to operate for at least several years, 5 years, 7 years, 8 years. And it's not just time by time. I mean, to recover the initial investment, it has to come from the profit of the. It has to think about it. What would pay for the initial investment? It will have to come from this operating profit. So, in other words, to know exactly where the company will, at what point the company will recover the initial investment, we can calculate that using the break-even analysis, because break-even analysis tells you at what point the company will break even. So, and that point is, basically, in other words, how many units do we need to produce and sell, right, to recoup all that initial investment, right? Of course, break-even analysis will give you, it's not just the, because there is expenses until, expenses that the company incurs until break-even, right? All that is, factored in. And then, so in terms of how many units, right? In terms of how many units, we can nail where the, at what point, the company breaks even. And so we need to produce and sell more than that level, right? So it may happen, the fully recovering the initial investment can happen at like 5 millionth unit or 6 millionth unit, or 6,755,112th unit or whatever. But then the expenses up to that point, right? Expenses up to that point can all be spread over, right? Every quarterly, over so many quarters, right? I mean, if your average monthly production level is 10,000 units, right? And if you break even at 5 millionth unit, then 5 million divided by 10,000. And that will be, like 5,000 quarters. You understand? Quarterly, right? Why? Because all, basically all financial statements are updated quarterly. Why? Business basic operating period is quarter, right? It's quarterly. So we have just started the fourth quarter of this year, right? October is the first month of the fourth quarter. July was the first month of the third quarter. And then April was the first month of the second quarter, and so on, right? And then October is called earnings season. Not only October, every first month of the quarter, is called earnings season. Why? The companies release their earnings report. Companies release their earnings report at the first month of every quarter. In other words, that doesn't mean the earnings report in October cannot be the earnings report for the fourth quarter, because fourth quarter hasn't ended. Anybody with a common sense can tell, oh, if the earnings report comes out in October, that must be the earnings from the third quarter. Make sense? Third quarter has ended September 30th, right? On September 30th. So third quarter earnings report comes out in October. And then just the same. Second quarter earnings report came out in July, right? First quarter earnings report came out in April. So fourth quarter's earnings report will come out in January 2022, right? So we are just getting, all these earnings reports. We just, started to get earnings report. Think about it. They will have to compile the data for the third quarter, and this so from the income statement. From the income statement, they will find what was their operating profit. So operating income or operating profit is the result of subtracting these expenses from income. We have identified two sources of income, identified two sources of expenses, and then we got the data. So then I told you the next thing to happen is subtraction, right? I told you the verb is to subtract, and I think I used this analogy, right? A third grader, even a third grader would understand, right? I mean, they don't have the concept of income or expenses, but they know, at least even a third grader understands that if this is money coming in, this is money coming in, actually, isn't that right? Income is money coming in, expenses are money going out. And as long as a third grader, they don't understand, they may not understand what's income, what's expenses, but they will understand this is money coming in and this is money going out. Then it is, even if, it is etched in all human DNA, right? Everyone, as long as, you have human DNA, unless you have alien DNA, right? It's our instinct, right? When we have money coming in and money going out, the natural course of action is to subtract, right? And that's the verb that I'm looking for. And when I ask these questions every semester, the students come up with all, they are trying, I don't know why they are not down to the basic. The logic is not a cloudy thing. Logic is not up in the air, Logic is not the clouds. The logic is very down to earth, straightforward, and clear thing, right? We and even without logic, by instinct, we know. Every human being knows if there's something that comes in, money coming in, and something that goes out, money going out. That doesn't have to be money. I mean, if it is fruit, right? There are fruits coming in and fruits going out. It's etched in our DNA. By instinct, we know we'll have to subtract the amount of fruit that goes out from the fruits that come in. Even a third grader can do that. And so it's simple. We subtract, right? And I ask, every semester, what is the course of action? What's the next course of action to follow? What's the next course of action that will follow when we have all this income data and expenses data? What's the next course of action? And then the word is subtract. But then they all try to find the answer somewhere in a very cloudy world. That's the downside of all this liberal arts education, right? Things like literature. Instead of teaching the students to clean up the idea to the very neat, neatly organized, concise form, they try to teach students to be verbose, wordy. Wordiness is such a pariah. In this day and age, wordiness is wasteful. Wordiness is wasteful. What matters is a clear logic, a very lucid, clear, concise, neatly organized, logical statement. That's math. Math is neatly organized, clear, and concise statement. That's math. Right? We defined revenue as price times quantity. Is there any redundancy in here? Price times quantity sold? It's not wordy, it's very concise, it's neatly organized, and infallible and indisputable, closed-ended, right? And also we defined, just like that, total variable cost as average variable cost times quantity billed. So what else how else can it be, right? Nothing else can be as neatly organized, concise, and infallible and indisputable. Nothing else can be this clear and closed-ended. But all these, literatures, they try to teach the students to be wordy. I mean, being wordy is fine as long as you have a very clear and neatly organized, concise, compact, closed-ended logic, right? Then it's okay. You can add flesh to that. But without this neatly organized, concise, clear, compact, closed-ended logic, just trying to be wordy, that's just waste. That's just a waste. It's just wasteful. And neglecting math results in that redundancy and wastefulness. People cannot think clearly and concisely, cannot come up with that solid logic, closed-ended logic, but just try to find, wordy answers. Wordy answers are useless. It's wasteful. But people still, try to fumble. They fumble with words. And they think wordiness, they think, I saw, a couple of years ago on a train, some guy was trying, to sell his book, his poetry book. And some people were, of course, it's better than nothing, right? It's better than nothing. It's better than no intellectual activity. But who knows? I mean, is there any? I mean, he published it, with his own money, and he was trying to sell it. Yeah, well, it's an art form. There is no criteria to tell whether it is good quality or high quality or low quality. But, how how do you know if a poem is a great thing, it's well written or not? I mean, it's just a personal thing, isn't that right? Of course, you can tell if he's talented or not. I mean, if it is well written or not. Sometimes, you can tell, whether that poem is brilliant or not. But sometimes it is nothing but it's nothing but just like a conundrum. Nothing but his personal own personal emotions, sentiments. That's poetry. That's wordiness. Nothing but there's no point, there's no conciseness, there's no a well written poem is really it's striking. There's a message and it's concise, and it's refreshing, uh, and it is innovative. Um, no, in other words, nobody has ever tried it like this, in this way. Um, you can tell if a person is talented in literature or not. Uh, but since an art form is it's in the eye of the beholder, even if it is it's just cloudy and not clear, unclear, cloudy, nothing, very, like a conundrum, very confusing, like a conundrum. Still, they think it is an art, but that's the problem with art education. Something like um, painting. It's not really even fine arts, because the painting can be, very, um, uh, very confusing. I mean, whether it is art or not, whether it is, a child's, uh, 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 painting by an elephant or painting by a monkey, there's no difference, right? Because there's no logic, there's no conciseness, there's no closed-endedness. And trying to define anything verbally, it will end up like that. It will just end up like that. That's why mathematical definition is, I've been telling you, always the best thing, because nothing can beat it, because it's indisputable, it's infallible, concise. Okay, I'm not gonna. So basically, we subtract all the expenses, from income, right? Subtract, and even the a third grader can subtract, right? Money coming in, they can subtract the money going out from money coming in, as long as they know, right? They may not know income, the concept of income or the concept of expenses, but income is basically money coming in, right? Expenses, money going out. So the right word, right? The verb is to subtract. There is nothing, nothing fancy or nothing, nothing cloudy or nebulous about it, right? We don't need. So you subtract it, and then we come to operating income or operating profit. It goes by many different names, but first of all, operating profit or operating income, or it goes by EBIT. EBIT stands for earnings before interest and taxes. Earnings before interest and taxes. And this designation, this terminology is what I prefer the best. Now, first of all, if you subtract cost from revenue, or if you subtract income, in other words, income from, if you subtract expenses from income, it is roughly profit. right? It's roughly. I mean, it's not exactly profit yet, because profit, we have to redefine profit. There is net profit, but there is operating profit. This is operating profit. At this point, it's called operating profit. But in accounting, they also call it operating income. Now, I'm against that, right? Because income is gross state. Income is gross income. And from this gross income, when you subtract all of these things, it shouldn't be called income anymore, right? It shouldn't be called income anymore. It should be called profit at that point. So it's called operating profit, but in accounting they also call it operating income. And then the better term is EBIT, which stands for earnings before interest and taxes. This terminology is self-predicting and self-explanatory. Isn't that right? It's self-explanatory. It means it is the earnings before paying interest and taxes. Then we can predict what comes next. What should happen next, right? Anybody has any idea what should happen next? Anybody? I have like 11 people currently. I see, okay, Mohammed Diop. Mohammed, are you there? Mohammed Diop? You're not there? Okay, if you don't answer, right, I will have to assume that you're not here, right? Then I will remove. I will remove you from the session.
Maybe he went to the bathroom, Professor.
Huh?
Maybe he went to the bathroom or something, Professor.
Yeah. I will give some time, but I will, if he's not responding, I will know if I remove him from the session, he will come back. If he's really here, he will come back, right? I will see him, reconnecting later on. But it looks, if he's really not, if he's removed, then he won't come back. That way, I can tell if the student is, really participating or not. Okay. Now, Eva, since your microphone was on, my question was, okay, I forgot my question.
He said his mic is not working.
I don't know. Did he say that? How do you know?
His mic is not working.
No. He didn't say anything. I mean, there was nothing like, there's no chat. I mean, if his microphone is not working, at least he would drop a chat. He didn't. But my question was what? Oh, yeah. Since EBIT stands for earnings before interest and taxes, right? We can tell what comes next, what should happen next, right? So, Eva, so can you ask the question from EBIT? What should happen,
Professor? My mic was acting up. I don't know why. I pressed the button, but it wasn't working.
Who was that? Peter?
Yeah, I had to leave the session and come back.
Oh, okay. I wasn't talking about you. I was talking about Mamadou. It was Mamadou Diop, and he's really not here. There are two. I see two Mamadous here. I see Mamadou Condé, and there was Mamadou Diop. And
yeah, I'm here.
Mamadou, yeah, you're Mamadou Condé.
But you said Muhammad, Professor.
No, I said Mamadou. Oh, Mohammed. I'm sorry. Yeah, he was Mohammed Diop. Okay, not two Mamadous. Yeah, I know Mamadou Condé is here. Mohammed Diop was here, and He wasn't responding, and I specifically called out Mohammed because he sent me an email asking for an office hour, saying that he has a question. But if he has a question, he can use this time. That's why I called him. But then he has disappeared. But Eva, so the question is on you. Question is to you. So from EBIT, what should happen next? What comes next?
You said that EBIT is the earned income credit, right?
Earnings?
Okay.
No. Earnings before interest and taxes.
Earnings before interest and taxes.
Yeah. Think about the acronym. I mean, acronym. The full name must match the acronym. E, earnings. B, before. I, interest. And taxes. T, taxes. So, what comes next then?
I'm kind of stuck, Professor.
Now this is the
don't kill me, Professor.
What?
I said, don't kill me. You sound like you about to blow my head off.
No, this is a very easy question. And from time to time, I have to jab everyone with some question. I have to prod you with questions. This is the opportunity to earn points, right? Participation points, right? And this is not a very challenging question.
All right, repeat it again.
The question is, what comes next? EBIT, when you have EBIT, right? And EBIT is earnings before interest and taxes. So what should come next? What is the next thing to happen?
Earnings after interest and taxes.
The operating income?
Operating income is EBIT, right? Don't you see? Operating income is the same thing as EBIT. I told you it goes by 3 different names: operating income, operating profit, and EBIT. They all mean the same thing. So then what should happen next? Somebody was saying something, right?
I said after you do the earnings before the interest and taxes, you want to get how much the taxes would be afterwards and subtract it.
No. Yeah, taxes will come later, but first, what should come? Was that Peter?
Yeah, that was me.
Yeah. What should come right after this?
Right after the operating income, you want to do the subtraction from the expenses.
Subtract what? I mean, subtract what from expenses? I mean, this is the result of subtracting expenses from subtract. This is the result.
I think I'm confused with the question you're asking. I think I'm confused.
Well, first of all, this is the result of subtracting expenses. Expenses are, CGS and, right? CGS and operating OPEX. Those are expenses. That's the result of subtracting that from income.
So then we get EBIT. So you're saying, what do we do after we get EBIT?
Right.
My brain goes straight into taxes. I'm sorry, but my brain goes straight into calculating the taxes right after. But you're asking for something else.
I said, taxes will come later, but it's not what comes immediately after EBIT. It's in your plain sight. It's in your plain sight. Look.
Interest taxable income?
Interest what?
The interest taxable income?
Interest and taxable income are not interest and taxable income are separate things. Interest and taxable income are separate things. You cannot compound them, right? You cannot put them together. They are separate things. What comes next is obviously interest. Interest payment. Why? Now, is it hard to interpret this acronym? It is earnings before interest and taxes. Literally, that's the earning, right? Before paying interest and taxes, right? It's the earnings before paying interest and taxes. So then if it is before paying interest and taxes, then what comes next is paying interest, right? Isn't it right? Logically,
You're absolutely right. So you're saying basically,
right. And I told you, profit and earnings mean the same thing. Profit is earning. Okay,
yeah.
That's why operating profit is equal to operating income and operating EBIT. Look, operating income is called EBIT, which is the same thing as operating profit. And then I told you the only thing that bothers me is continuing to call this income. And in accounting, they do that. They do that in accounting. Okay, they do that in accounting.
So you would pay the interest and then you would do the taxes afterwards.
Right. It's in that order. You must pay the interest first, and then if you pay interest, then that becomes EBT, because look, from EBIT, I drops out, right? When you pay interest, I drops out. Then, it's natural that it becomes EBT. Now it's earnings before paying taxes, earnings before taxes, right? And then another name for that will be taxable income, right? If you are right before paying taxes, that earnings, what should you call that? I mean, what would be another name for that? It would be taxable income. What else can it be? Right? It will be taxable income. And then you will pay taxes from it. And then after paying taxes, think about it, after paying taxes, then what should it be called? Then it is earnings after taxes. Now you have paid taxes, so it's earnings after tax, right? EAT. Or it is net profit now, net profit. That pi stands for profit, of course. Pi stands for profit, okay? And in accounting, they still call it net income. So this is why I'm against, but there's a reason why they still retain the term income. I mean, in corporate context, think about it. In business context, right? Calling this profit is the right thing, because when you subtract cost from revenue, then it should be called profit, right? Or earnings, but not income. So it's in corporate context, it's better to call it operating income, operating profit, but taxable income still, I mean, not taxable profit, but finally net profit, right? But then if this is not a corporate income statement, if this is not business, let's say this is your personal thing, of course, it's first of all, people, as an individual, people don't keep personal income statement. I mean, there's no law prohibiting it, but you can do it. You can, if you want to, you can keep your personal income statement. But it's not required. It's not mandated. I mean, for businesses, especially companies that are publicly traded, what does that mean? Companies that are publicly traded, what does that mean? Anyone?
That they're in the primary market or they sell securities?
Yeah. They are in the primary market, or that means they are traded. They are selling stocks. They are listed in the stock exchange. Okay. Peter, right? At least I can give you 0.25 for that answer. At least so Peter. 0.25 for that. The companies that the publicly traded companies are the ones that are listed in the stock market, selling stocks to the public, and then they must they must release their financial information. That's for transparency. Think about it. Companies that and of course, they are required, it's required by law. SEC, Securities Exchange Commission, requires them, all the publicly traded companies, to publish their financial statements in the EDGAR database. EDGAR database is the SEC's database for the financial state to publish, upload their financial statements. All the companies must upload. Companies that are in the stock market must, and companies that are not publicly traded, they don't have any obligation. But for their because they are not selling stocks to the public, but for their internal purpose, they will still need to, right? Every company must, for their internal managerial purpose, accounting purpose, they will have to keep the financial statements. Yes, Peter, you raised your hand. That means you have a question.
Yes. You said that the companies have to let the SEC know that they're trading securities. My question was, like when you file 13H, right?
Mm-hmm.
Isn't that the equivalent of an individual person letting the SEC know that you traded securities hand over fist as well, or no?
No, individuals. I don't think individuals have any obligation to SEC. Individuals will, when they file taxes, they're first of all, if an individual buys as a retail investor, individual buys and sells stocks, the broker, and the company that the company has an obligation, right? The company that sold stock, or the broker, right, that's traded the stocks, will have the obligation to report to SEC, not you, right? I mean, you only need to report when you file tax return. You only need to report, what was your capital gains, during the past year. You had, transactions, and if you had capital gains, capital loss, if you had dividends paid, you only need to report that to IRS.
All right, cool. Because I was wondering, they I think it was like if it was something over $1 million or something over like 500,000 that the SEC wants to get that information. So it was good to know you have to.
Well, I'm not. I've never traded that large, in that large amount. So I don't know personally. But if that is the case, the brokerage, right? The brokerage will have there will be, it will be reported by the brokerage, and and SEC is not SEC is the regulatory authority for financial institutions, investment banks. Not, your obligation is not to SEC, but to IRS. So you will report that to IRS, not to SEC. I mean, that's basically, what I know. And you are not you are an individual, not an institution. I mean, an institution would have an obligation, but not an individual, right? Now, since I see Mohammed Diop again here, Mohammed, are you there? Mohammed is back. Mohammed Diop, can you hear me, Mohammed? Are you there? Mohammed, please respond. I will have to assume that you are here, Mohammed. I saw your email, but I've been telling you, not you were you were lucky. Mohammed, you are there,
Yeah,
yeah?
yeah,
Let me
yeah, yeah. I've been trying to talk.
yeah. Um you were lucky that that I found your email, but I've been telling you from the day one not to
Uh-huh.
send email to my BMCC account because I gave you
Oh,
my Yahoo account, because if you send it to BMCC account, it will all
uh-huh.
go to junk mail folder, and I have to actively really, I mean, I have to deliberately search, scour through my junk mail to
Yeah, yeah.
find any email from the student, and
Oh,
it
okay.
couldn't have been discovered, right? But
Yeah, yeah,
this
yeah.
time, so uh, again, so I don't have any more office hour this week, right? And my last office hour was, at 12 noon.
All
So
right.
you can ask that question now. I mean, the collaborate session is basically for, uh, question and answer.
Yeah.
So, what was your
Okay, okay.
question? Hmm.
I'll ask you. I'll ask you. Hold on. Let me look it up again.
Hmm.
All right, I'll look it up again.
Okay. Yeah. Stay on, and
Yeah, yeah, yeah.
just let me know when you are ready. So let me then, in the meantime, let me just continue with the. So here's the thing. As I said, if as I said, individuals don't have to keep income statement. I mean, it has no purpose. It serves no purpose, as far as because businesses must keep this, and then this way they can. This is the basis of their tax, right? Computation, and so this is a like supporting document for um, I mean basis of their tax calculation, uh, and all the businesses, and there's no one standard format, but slightly varied formats, but as long as they conform to a GAAP, right? GAAP stands for Generally Accepted Accounting Principles. Then GAAP, as long as it conforms to GAAP, then it's fine. And GAAP is then there is no financial accounting standard accounting reporting, financial accounting financial accounting standard reporting board, or reporting standard board is the it's not government agency, but private organization that sets the guidelines for GAAP. But anyway, individuals don't if but individuals, if they want to keep income statement, fine, they can do that. But if this is, think about it, if this is individual, will it is it is it natural to call this operating profit for an individual? Huh? For individuals, income is the right word for individuals, because individuals. What if you are self-employed? Still, if you're self-employed, yes, still income, right? Not profit. But if you are a sole proprietorship, you have your own business, sole proprietorship, then you will keep financial statements, you will keep income statement, you will keep balance sheet, and then as a business, you will call that profit, right? So although it is, at first, in accounting, when they use the term income interchangeably with, profit, it doesn't seem to make sense. But uh, if we are talking about the corporate business income statement, business income statement of a business, uh, income doesn't make sense, right? Income is gross state, and after subtracting expenses, then it should be called profit, right? But then if it is individual case, then yeah, income sounds okay. Income sounds right. Um, Again, now, so here I did a few calculations already. It's already if I removing this, it's easy. And normally, when I use Excel, I want you to of course, I want you to open that file and do it with me at the same time. So it's not a difficult thing. Net revenue, all you need to do is, sum everything using auto sum, and returns and allowances are already negative. So if you sum, it will be automatically subtracted. And I told you I used, basically when I explained CGS, I used, manufacturing's example, but this one is not manufacturing. This is, retail, a typical example of retail, because retail has only finished goods. The way they count, evaluate their CGS is through evaluating the inventory, right? But anyway, it can be easily found by using auto sum, right? You sum everything, returns and allowances already negative, so it will be subtracted. OPEX, it will be subtracted. OPEX, it will automatically be using auto sum, right? Now, in our example, we ended up with negative profit, right? Of course, because if subtracting some of these two, CGS and OPEX, some of these two, you must subtract it from net revenue, right? And then the expenses were greater, so we ended up with negative profit, which is loss, basically, right? So I told you that's why it is called, profit and loss statement, right? Income statement is also called a profit and loss statement. Now, and sometimes, companies end up with, negative profit. And why do we have interest? Then if we have interest, that means we have debt. We have debt. So when did we get? Remember, if this is a startup, right? Let's say, like Dell, a computer manufacturing, we need plant and equipment, right? And so plant and equipment cost, let's say, tens of millions of dollars. So let's say $10 million. So how do you raise that capital of $10 million? How do you raise that capital? Of course, theoretically, we get it from the investors, right? Like, we sell stocks or we sell bond, right? So we get, investors, if you sell stocks, that's equity. If you sell bond, that's debt. So this is interest. If you have debt, we have to pay interest, right? So theoretically, it is, it will look nicely like that. We raise, like 50 million in, or 5 million in equity, 5 million in debt. But in reality, it's almost impossible. Why? A startup. Who's gonna invest in a startup, right? And you go. Who's gonna lend money to a startup? A startup is nothing but someone with a brilliant idea, right? Someone with a brilliant idea, but no track record, no assets to put up as collateral, right? So it's hard to borrow money. It's hard to find investors. Usually, if it is a really brilliant idea, you can meet, if you're lucky, you can meet a venture capital or angel investor, venture capital. Now, have you guys seen a TV show called Shark Tank?
Yeah,
Huh?
Shark Tank.
Shark Tank,
But
yes.
they come with their
Shark
business
Tank.
propositions.
Right. Yeah, it's basically a show. I saw just once or twice. I'm not really watching it, but it's a show where this startup people with business ideas. They want to start up, but they don't have capital, so they want to find a venture capital, right? Right. So in that show, if they are selected, then there will be some funding. Some venture capital will, fund that business. But the point is, in reality, it's that difficult, right? It's that difficult. But because this is only our thought experiment, let's assume that you got venture capital. So venture capital invested 6 million into your company, and you are able to get a loan from the bank, right? $4 million. So you raise 10 million in capital. So this 10 million will go to building your plant and putting equipment in the plant, right? Of course, that alone isn't enough. Just because you have plant and equipment, that doesn't mean you can start a product. There will have to be working capital, right? You will need working capital to support your business until it generates the first round of income, first round of revenue, right? But in our example, anyway, we got some debt. We got a loan from the bank. That's why either we sold bonds. Okay, somebody's microphone is on and it's picking up background noise. So if you're not speaking, please turn it off. Um, Please mute yourself. So this is why we have interest. So we pay interest. This is the interest rate. This is quarterly interest rate. If you click on it, you will see annually is 2.5, but divided by 4 quarterly, because all the statements are, I told you, all the statements are basically quarterly. And then what is the taxable income? Taxable income is this plus this minus this. But then this minus this will still be a negative number, right? It will still be a negative number, isn't that right? It will be a negative number. But think about it, negative number. Let's see.
Excuse me, Professor. What is this and this? I didn't see what this and this was. You mean operating income?
Oh,
Yeah,
follow
point
the
to it.
cursor.
Point to it again, Professor, because you just said this and this. You didn't say what it was.
Oh, okay, all righty. Look, taxable income is this minus this. You see the cursor? You see the movement of my cursor?
I'm gonna refresh it because I think mine is frozen. But let me refresh it once.
Okay. So operating income minus interest is the taxable income. I put it here. So it's J25 minus J27, right? So everyone can see that.
So operating income, you said minus interest?
Interest, right. Yeah, because taxable income is EBT, meaning, it's I drops out from EBIT, right? So look, do you see this cell? I put J25 minus J27 there. You see this cell? L28, right? Let me know if you can see it or not.
I can see it, Professor.
We got it.
Okay, that explains what the taxable income is. But why did I put it here? Because if you do that, you end up with negative number. Now, your taxable income is negative number. If your taxable income is negative, what does that mean? You have no taxes to pay. Isn't that right? But mathematically, you will end up with negative number, and then you multiply. This is the tax rate. You multiply that by 35%. There will still be a negative number for taxes. Of course, that doesn't make any sense. I mean, that's out of the question. Look, what is negative tax? If you don't have any taxable income, if you have made loss, right? If you incurred loss, then you just simply don't have any taxes to pay. But just because mathematically your taxable income is negative, you just multiply that by tax rate, then you will come up with a negative number for taxes. Does that mean IRS owes you money? right?
No, they
Positive
just take
tax
it
is
off.
what you pay to IRS, but then negative tax means IRS is paying you money. Of course not. That is, this is just a pitfall, because if you just, without thinking, if you just go by the numbers, then, so what I did here is I used this command. What is that? Maximum between the two, maximum between 0 and J20 minus J27, which is basically this minus this, right? Right. So this is, we already know what this is. J25 minus J27 is taxable income, but that will be negative number here in this case. So think about it. If taxable income is positive, the bigger one, the maximum, is picked. So if this is positive, this cell will show the positive taxable income. But if this is negative, 0 will be picked, and this cell will show 0. So then, that way, we can handle both negative and positive numbers for taxable income. That way, in this case, we can end up with 0 taxable income. And if there's 0 taxable income, of course, there will be 0 taxes. Here, I used if command. We're out of time, so we're running out of time. So I cannot. I will come back to this in another class. But then the model can be applied universally. In other words, regardless of positive or negative taxable incomes, it can automatically handle it, right? Without you manually putting in the number there, right? It will automatically handle that. And then the net income is literally from, then what do we need to do? From the operating profit, right? Then we subtract interest and taxes, right? J27 is interest, J29 is taxes. We subtract the sum of those two from J25, which is the operating profit. Then we end up with net profit. Okay, this way it will be automated, right? The thing is, in this example, we ended up with a loss, but it's not always loss. Some quarters we will have profit. Some quarters, maybe not. But this is how you conclude, right, your income statement. Okay, and I wanna turn to Mohammed Diab, because Mohammed had a question. Mohammed, you found your question? Mohammed, are you there? Okay, your laptop died again, Mohammed. Mohammed, are you there?
He said yes, he's here.
Yeah, use your microphone. Ask that question you had.
His mic is acting up.
Oh, okay. So can you then briefly type into the chat box?
Give me 5 minutes and we about to end class.
All right.
Can you type into the chat box, Mohammed? Or is it too long to type? Oh, that was the What homework are you talking? Oh, homework is, you mean the connect
It's in the Sim Connect.
Huh? You mean connect chapter problems? Yeah, okay. If you mean connect chapter problems, right? Here, let's go to in the course information, right? Right? Are you watching course information? You scroll down, and there is a connect site link information. You here you click on the link, but please use your BMCC email and enter your name, last name first, right? In that order, last name first, comma, first name. You click on that. It will take you to this site. So use your BMCC email to. I want to demonstrate it, but my email is already there, so it will just it won't give me the that page, the landing page where you can enter the super code. I mean, if you have your own access code already, then use it, right? If you haven't received the book and the access code yet, use the super code, right? And then once you enter your BMCC email, this bar will light up. This will be blue. It will look, and then you click begin, and then in the next page, then there you type in the super code. I gave you the super code, right? Don't tell me you don't know about that. The announcements, all right? I gave you the there's the super code, right? And again, please don't send to my BMCC email. I gave you my Yahoo mail. It's I spend a lot of time scouring through my junk mail to salvage the to spare the student emails. But a lot of them go just purged because every week, weekly or bi-weekly, the junk mail folder is purged automatically, right? So if you send email, then it may not get discovered. Okay. So Mamadou, so you got the answer? Mamadou, you got? Okay, good, good. All righty. All righty. So back here, I want to and then the income statement. I told you the purpose of income statement is to show the process leading to profit or loss, of course. But this activity, income statement, is showing actually description of the operating activity. All businesses engage in three types of activities, three types. First, operating activity. Second, investing activity. Third, financing activity, right? All businesses are engaged in these three activities. Of course, operating activity is what you do to make profit. Sell something, generate income, subtract expenses, and arriving at profit. That's operating activity. So operating activity is exactly from here, right? From here to here, right? Okay, everyone, it's highlighted. From sales revenue, right, to EBIT. That's the operating activity. And hence it's called operating profit or operating income. And then what is financing activity and what is investing activity? Investing activity and financing activities are reflected in the balance sheet, right? So the balance sheet is our next topic, next discussion. But again, we already by main lecture, we already done with this. Okay, we already done with this, and then actually we are currently in topic 3, right? We are done with topic 2, and actually we are in topic 3, right? So you must be all caught up to these 2 videos, all the way up to these 2 videos, okay? And don't forget, tomorrow the quiz 1 begins, right? You have 120 minutes in one sitting, right? Once you start, then 120 minutes. And I guess most people will be able to do it within 60 to 80 minutes. As I just always give you extra time, like, that's why. Alrighty, so good luck with your quiz 1. This is the first exam that 20% of your semester grade comes from, right? So good luck with your quiz 1, and I will see you guys all in
So,
on next week. Yeah.
What was
Eva,
the
yeah.
other test that you took last time, 2 weeks ago? That don't count?
Oh, that was practice. That was just practice test, right? ROI, all that ROI, just like chapter problems on Connect. Those were practice problems.
So you're not counting that grade?
It can help. It doesn't count towards your semester grade, but if you are at risk of falling behind, in other words, at risk, those who are at risk. And what is at risk? If you're at falling behind, if you're at risk of falling behind B minus, right? All the average of all the practice problems, right? Chapter problems and practice problems will kick in to boost your lowest exam score. Okay, so it may not boost it greatly, but at least marginally. If you are marginally below B minus, it can boost it to above B minus, or any grade level, right? If you're marginally below something. And another thing is, some students, let's say it can help boost the lowest exam score, but if you missed, let's say, if you missed midterm, and midterm is, oh, I see your hand, Stacy. I will just be patient. I will get to you. I won't close out the session without getting to you. Okay, be patient. If you missed like a midterm, and midterm is like 25%. Midterm is 25% of your. Then if you missed it, you are missing that data. In other words, you have 0 for midterm. Then what do I do? If you have done consistently all these practice problems, chapter problems, then I will use the average of these practice problems, right, to replace that midterm that you are missing. And that way, then it can boost your grade, significantly, because previously you were missing the 25%. Now you have the 25%. Of course, assuming that the average of all those practice problems are good. Also, if you're not at risk, if you're above B minus somewhere, then if you're already A, if you're A minus or B plus, then it's because you have done, and the people who have done all these practice problems will do better, right, in the exams than those who didn't. And also, if you also just by yourself, right, you would get a better result in the exam by doing these practice problems than not having done it, right? That goes without saying. So if you do these practice problems, you will be rewarded by better grade, right? Than not, from not doing it. You will get a better grade from doing those practice problems, right? Than from not, doing those, right, practice problems. Okay, does that make sense? Yeah, Stacy, what is your question, Stacy?
Where is the
Stacy,
test gonna be at? Is it gonna be in Blackboard or we have to
yeah,
do it
it's
with
gonna
the
be
book?
on Blackboard. Okay,
Okay.
it says clearly. Look, in the announcements, it says clearly it will be on the Blackboard. The quiz one is the last exam on Blackboard, and after that, everything will be on the Connect.
I'm gonna try to see if I could find the book tomorrow. I'm going to the college tomorrow.
Yeah. If you can see, it is there. It's just not visible to you, but it's there, and it's on the Blackboard. Okay.
Got it. So it's gonna be
All right.
available today at 12 a.m. Oh, I mean tomorrow at 12 a.m.
Tomorrow, 12 a.m. Okay.
Thank you.
All right. All righty. Any other questions? If not, it's already, you guys owe me another 5 minutes right now. So I will see you guys all next Tuesday. All right. Good luck. Have a good rest of the afternoon. I'm gonna stop recording, and I'm.
Have a good day, Professor.
All right. You too, Eva. I'm signing out.
Yeah, later.
Okie doke, everyone. All right.